Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, it was a bloody Friday, as I'm sure many of you heard. The big narrative out there in the news item is that Trump is going to put 100% tariff on China and much more. It's like deja vu, what we saw earlier this year, and markets, of course, dumped on that news. Bitcoin, massive crash down to just about 106, 7,000 around there. It's funny, it wicked down to the 200-day moving average. So let's see how far down this goes. But one thing we're seeing here is that the daily RSI is approaching that oversold zone. Now, what we've seen from a cyclical pattern standpoint is that when we hit overbought, we reverse. When we hit oversold, we reverse. It's just a matter of patience because it does take some time. But this is pretty much a massive flash crash, and it happened across all markets. The stock market, S&P 500, NASDAQ, Dow Jones, everything down. The volatility index, the VIX, is spiking. So we are just seeing lots of volatility here based on what's happening. So guys, we want to be educated, not emotional, right? So let's leave our emotions at the door because you're going to see a lot of people panicking. They're going to be very fear driven, just like they were at the beginning of the year when I was telling you guys, hey, the macro structure still intact. We're still in the bull market. And guess what, guys? Macro structure still intact. Now, obviously, if there's some major invalidation of the macro structure, then I would say, hey, guys, that's it. Wrap it up. It's all done. Whatever happened here has changed everything. But I don't think that's what's going to happen based on multiple factor and data points. So if we look at the amount of liquidations, this was actually the largest liquidation, guys, in the history of crypto. Bigger than Luna, bigger than COVID, bigger than FTX. But this makes sense logically because we're in a much larger market, right? There's more asset holders, more liquidity. The crypto market has grown significantly since those respective situations. And look at this, the sentiment has now went back to fear. So what you're going to see, and I actually tweeted out about it. Let me read the tweet. I think that will be easier to understand. Flash crash, flush the longs. And this comes right after Bitcoin pumped to 126,000, new all-time high, which flushed the shorts. Sentiment is now in fear. As we saw earlier this year, retail will run in fear with narratives of tariffs and government shutdown. Get ready for the market to do the opposite of the crowd. We've seen this time and time again. This is why you can't be emotional about the markets. You have to be educated. You got to look at the data points. And folks, from a macro standpoint now, the high time frame, not the short term. The short term is bearish, right? I want to make sure that's clear. I am saying the short term is bearish. The bears are in control on the weekly. The bears are in control on the daily. But on the higher time frame, bulls are still in control. If we look at the monthly chart, this crash right here is not even registering as some major red candle. It is like a little red candle. And we can see that the bulls are still in control here. It has not flipped bearish. And the RSI has not hit levels that we've seen as far as the zones for the blow-up tops. So that's the data, okay? So I'm not making it up. This is not a spin on it. It's just the data as is. Bulls are still in control. Now, as I mentioned earlier, could further black swan events and random stuff pop up that drive us into a bear market? Sure. I think there's definitely the possibility of that. But what you got to look at is the probability. Which one has the higher probability of playing out? I believe, based on the data points I'm sharing with you guys here, that the bull market's not over. And I think we could see a V-shaped recovery out of this flash crash. Now, another metric I'm looking at is that Bitcoin whales start to dump. Now, it's kind of hard. We may have to wait a few days to see the data roll in. But so far, they've been accumulating nonstop. In fact, they've ramped up their accumulation. If you caught my episode with Brian from Sentiment that was published this morning, we went through the data. The whales, since the correction started in August and continued into September, have been accumulating, and the data is showing that. And in addition, macro signals like the Pi cycle top indicator, nowhere close to flashing. So we got a lot of different factors here screaming bull market because the macro structure on the high time frame is still intact. This is the same data points I was sharing with you guys back in the tariff crash at the beginning of this year when people were screaming, oh my God, it's over, the end of the world, yada, yada, right? So same thing is happening here again. Now, what's interesting, and this may be the most bullish indicator right here. Jim Cramer started tweeting bearish statements. As the markets were crashing, he says, very quick decline, not needed on a Friday, and could cause some heavy selling in some of the most extended stocks. Then he said, falls a lot faster than it goes higher. Of course, everyone is like inverse Cramer. This is very bullish because when he's going this bearish, right? We've seen it time and time again. It never fails. The opposite happens. Now, will it flip on a dime that come Monday we start pumping to new highs? Of course not, right? The markets are cyclical. There's time for the market to digest all of this, for traders and investors to digest this. But here's what my thesis, in addition to the data. You have some of the most fearful things for retail. Once again, the tariff situation again, plus government shutdown, right? Plus people are hearing about jobs. They're not certain if the Fed is going to cut rates and all kinds of stuff. It's just a matter of that tariff situation resolving, like some of it did earlier this year, or Trump pausing it again, right? And the government reopening and the Fed coming and saying, hey, we're going to cut rates again and yada, yada. And then the markets flip. How many times have we seen this, right? And when you step away from the emotions of it, this is where you can see some of these patterns, the cyclical patterns playing over. And again, I'm not ignoring the bearish scenario. I'm just saying it has a lower probability of playing out than the bullish. So what's interesting though, guys, ahead of this crash, we got some of the most bullish news in this crypto industry. Morgan Stanley drops restrictions on which wealth clients can own crypto funds. This news broke this morning. Very bullish news, right? So Morgan Stanley on Friday told its financial advisors that the firm was broadening access to crypto investments to all clients and allowing such investments in any type of account, including retirement accounts, CNBC has learned. Starting October 15th, advisors will be able to pitch crypto funds to any client. Previously, the option was limited to those with an aggressive risk tolerance and at least $1.5 million in assets. Morgan Stanley will rely on automated monitoring process to make sure that clients aren't overly concentrated in the volatile asset class. But guys, they are opening up more. And in yesterday's podcast, if you recall, I mentioned State Street, the massive Wall Street bank. They stated in a new report that institutional investors plan to double their exposure to crypto. So clearly Wall Street's bullish. They've been buying a lot. They're opening up. Vanguard has capitulated and much more. So it's so interesting that this news broke and then you have the massive crash. So you can imagine these guys are going to buy up like crazy. They're going to buy the dip. They always do the opposite of the herd when people are afraid and saying the top is in. And man, we've seen this so many times, right? Just the cyclical pattern of the market cycles playing out. Now, folks, this episode is brought to you by Trezor. Trezor makes it easy for you to safely store your crypto assets. They were the pioneers of hardware wallets. They started doing this in 2013. They created the hardware wallets and the seed phrase setup. And folks, I'm a user of the product. I use the Trezor Safe 5. It's a beautiful hardware wallet, easy to use, large screen, and much more. And Trezor's hardware wallets are open source, and they support all the top coins, Bitcoin, XRP, Solana, Ethereum, and much more, even new coins like BlackRock's BUIDL. And they have a hand-holding service where you can speak to a Trezor rep to help you onboard and get your device set up. Don't worry, they don't ask you for your private keys, so that's not something you have to worry about. And folks, if you use my code Thinking Crypto, all one word, Thinking Crypto, you can get 5% off. So once again, I believe in self-custody. I have preached about self-custody for many years. That's where I custody majority of my crypto assets, and it helps me to sleep at night knowing that that's there. My seed phrases and so forth are backed up. And guys, check out Trezor. Once again, they make beautiful hardware wallets. They are the ones that started all of this. So they have the pedigree. So check them out. Link will be in the description. All right, moving ahead, we got some interesting news here out of Texas. So Texas lawmaker behind the state's crypto reserve bill says Ether may be next. So I've often told you guys that it all starts with Bitcoin and then it moves to altcoins. It's the natural progression that we've seen time and time again. So this year, the Texas legislature passed a law to establish a strategic Bitcoin reserve in the state, opening the door for other cryptocurrencies in the future. According to the original sponsor of the bill, Ether could be the next reserve asset. Speaking to Cointelegraph on Tuesday, Texas State Senator Charles Schwertner discussed the implementation of the Bitcoin Reserve Bill signed into law by Governor Greg Abbott in June. Though the text of the bill allows Texas to hold other cryptocurrencies in a special fund outside the state treasury, Bitcoin was the only one to meet the requirements at the time of passage. Here's a quote: "I'm really interested to see the speed at which they establish the reserve and how it acts from a return standpoint. If Ethereum maintains its market cap over 24 months, I think it's reasonable and prudent to give direction that Ethereum could be added to the cryptocurrency reserve." So, guys, I think over time they're going to add more altcoins. It starts with Bitcoin, and I think the doors are going to open up to other altcoins. All right, moving ahead, Securitize in talks to go public via Cantor's blank check firm. So we continue to see more and more crypto companies go public. One of the big ones that is anticipated this quarter is Kraken, that they could go public. But it's great to see Securitize, getting involved here because they are leading the charge with tokenization. Remember, BlackRock has invested in them. They helped BlackRock to launch their tokenized fund called BIDL. So it makes sense. This is the time we're in a bull market. Again, no one does an IPO or goes public in a bear market, right? So we're still in the bull market. So that's why these firms are all doing this now ahead of a market top. So Securitize, the tokenization platform behind several major blockchain-based investment products, including BlackRock's tokenized U.S. Treasury fund, is reportedly in talks with Cantor Fitzgerald to go public via a special purpose acquisition company, or also known as a SPAC. Bloomberg reported Friday, citing anonymous sources, that Securitize is in discussions to merge with Cantor Equity Partners II Incorporated, a blank check firm backed by Cantor Fitzgerald. The deal could value Securitize at more than $1 billion, the report said. So pretty incredible. This would be a company I would look to invest in if they go public because, again, they're leading the charge with tokenization. They are heads and shoulders above the competitors, in my opinion. All right, moving ahead, look at this news. Banks explore launching a stablecoin linked to G7 currencies. So we're seeing a massive stablecoin initiative here, backed by tons of banks. Let me give you the details. A group of banks are in the process of exploring the launch of stablecoins focused on some of the world's biggest fiat currencies, including the US dollar, euro, and Japanese yen. According to a Friday statement from BNP Paribas, banks including Bank of America, Goldman Sachs, Deutsche Bank, and Citi said they had launched a project to explore the issuance of a one-to-one reserve-backed form of digital money that provides a stable payment asset available on public blockchains linked to currencies from the group of 7 or G7 countries: the United States, Canada, the United Kingdom, France, Germany, Italy, and Japan. Here's a quote: "The objective of the initiative is to explore whether a new industry-wide offering could bring the benefits of digital assets and enhance competition across the market while ensuring full compliance with regulatory requirements and best practice risk management," said the banks. Folks, I think this is a pseudo CBDC. You got the major banks, major countries involved, and they're going to be plugged into their respective central banks and treasuries and so forth. So we got to be vigilant and watch what this is, and see how it's rolled out and what are the restrictions, right? Does it respect your rights and much more? But this has the smell of a CBDC. So we got to watch out here, folks. And some of the biggest banks are involved. So it's going to be interesting to see how these bank stablecoins compete with the crypto native companies like your Tether, Circles, Ripples, and so forth. And don't get me wrong, you have companies like PayPal with PYUSD and much more. But I'm really curious to see how the competition plays out between all these things and who uses what. The thing is, with these banks, they have a large customer base already. They have the brand. But the younger generation is moving more towards non-banking services or neobanks versus the traditional banks. So there could be a generational shift here where the banks don't get as much adoption as they're thinking. But as long as there's boomers around, they will, all right? Because the majority of boomers trust these banks. But we'll see. We'll see. I think there's a whole study and other conversation here to understand how this is what type of impact this is gonna have. All right, moving ahead, Aurelion Treasury launches Nasdaq's first Tether Gold-backed reserve. This is interesting. So many of you know Tether, they have a tokenized gold product, and it looks like this company here is looking to have that in their treasury, which is interesting. NASDAQ listed wealth and asset management services provider Prestige Wealth is rebranding to Aurelian Treasury to launch the NASDAQ's first Tether Gold backed corporate treasury as more Wall Street companies explore digital asset offerings. To launch NASDAQ's first Tether Gold treasury, the company announced the closure of a $100 million private investment in public equity financing round from anchor investor Ant Alpha Platform Holding Company and other accredited investors, including TG Commodities, SADEC, oh my goodness, and the company said Friday. So this is an interesting move. And the one thing that how this is related to crypto is that the gold is tokenized on the blockchain. So that's where we could see other tokenized assets be used as treasuries, maybe real estate and things like that. But we'll have to wait and see. I think things are too early. We still need some clarity, and we'll see how this all plays out. Final news item here, after hearing about Polymarket's investment from the Intercontinental Exchange, the owner of the New York Stock Exchange, we got Polymarket's competitor, Kalshi, raising $300 million to expand prediction markets to 140 countries. So prediction market competition heating up here, folks. A lot of capital flowing around here. So United States-based prediction market Kalshi closed another major funding round to bring its platform to more than 100 countries worldwide. Kalshi completed a Series D funding round of over $300 million led by Sequoia Capital and Andreessen Horowitz, with participation by Paradigm, the company announced on Friday. The platform is immediately available in over 140 countries, Kalshi said in a statement shared with Cointelegraph, adding that it has now emerged as the world's only unified global prediction market and instantly added billions of new potential customers. Very interesting here, folks. And look at the amount of capital being raised, right? Clearly, this technology powering different markets and platforms and creating new financial products and so forth is the future. And you're seeing a lot of people take the respective bets, right? I've often stated, if you're an entrepreneur, man, now's the time. Put that pitch deck together. Go out there. You can at least get some money if you have a good idea, of course. And the capital is here. A lot of the hedge funds, VCs, have steered away from Web 2 and some of the traditional investments to crypto now. So I think this is the next big trade for them. So pretty interesting what's happening. Folks, that's the news. Let me know what you think, especially the market flash crash here. Pretty severe dump, but you look at the monthly chart, that thing is not even registering. And like I said, there is a bearish scenario and there's a bullish, but I believe the bullish has the higher probability of playing out based on the data. So if you appreciated this content, please support the podcast by subscribing to my free email newsletter. I'll put out a write-up tomorrow. It's 100% free. It's on Substack, link in the description. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.